We have Salesforce's earnings report that they just released a couple minutes ago, and the stock is actually selling off after this earnings report release. It's down 7.25%. Now, this can be caused by a variety of reasons, and what I want to do in this video is I want to go over why the stock is selling down after hours. I want to go over the entire earnings report. I have the whole thing pulled up right here, and we'll go over CNBC's coverage of this report as well. So the first thing that I like to do when I look at earnings reports of companies that I own, which Salesforce is one of them, I have it in the story fund here. It's a $5,300 holding. I'm going to be down 6% on this one tomorrow if the after hours trading sticks. But one of the things I like to do with a stock like Salesforce that sells off after hours is I try to imagine that I can't see the stock price today. If I can't see what other investors think of it, and I try to imagine my completely unbiased take on this earnings report, had I not seen what went on with the trading. So if I just looked away and I didn't ever look at the price and I just read the actual earnings report as an owner of the business, would I be happy or would I be upset? That's what we're going to try to do in this video. Now, as we jump into the story, just a quick note, this video is sponsored by FTX US. Use one of the links in the description below to set up your brokerage account and make sure to use the refer code Carlson to get $10 credited to you when you set that up. Now, like I've shown before, I have the story fund here, over $100,000 invested in these companies. And one of the companies that I've invested in for a long time now, I guess not too long, but since the beginning of this portfolio is Salesforce. It's underperformed since I've invested in it, but a lot of these companies in this cloud tech category have followed the same path. This one, though, I think is different than a lot of the smaller companies. Salesforce has a very wide moat. It's a company that has huge network effects. It has very high switching costs. When you sign up with Salesforce, it's difficult to move to a competitor. So I've been invested in this company and I've been following the fundamentals. I currently have a holding size of $5,300 and I'm in the red by around $800. Now, let's go ahead and just look at this report here. The headline is not great. Salesforce trims full year expectations for earnings and revenue. We can read through a couple important things here, but we'll skip to the most important part. We have the earnings that were $1.19 per share adjusted versus $1.02 per share as expected by analysts. So they actually beat on this quarter's earnings. That's good to hear. The revenue was $7.72 billion versus $7.69 billion expected. So they beat on their earnings and their revenue. When a company beats on its earnings and revenue, and it's still selling off after hours, the only real thing left is guidance. After a company reports last quarter, which is all historical data, then the company will usually give some type of expectation for the future and say, hey, we're expecting a slowdown or we're expecting business to tick up. And what they did here is obviously they said we're expecting business to slow down a little bit more than what's expected previously. So that's what's causing this after hours 7% down. Let's go ahead and look at the actual report here and some of the highlights. Revenue of $7.72 billion, up 22% year over year, 26% constant currency. That is, if you take currency exchange rates out of the equation, they grew revenue by 26%. That is substantial, fast revenue growth. 26% is pretty incredible. The earnings per share of 0.07, non-GAAP of $1.19, current remaining performance obligations of $21.5 billion, up 15%, 19% constant currency. This is like your backlog of things that you have in unrecognized revenue. You basically have commitments, $21.5 billion. This is current remaining performance obligations. And so they basically have a pipeline of money coming in that they can project out in the future. Third quarter, financial year 23, revenue guidance of $7.82 billion to $7.83 billion, up 14% year over year, 18% constant currency. And this is the revenue slowdown. See, they just reported 26% revenue growth on a constant currency basis, and now that's going to slow down to 18% revenue growth. And this guidance is really what's causing this sell-off. It's probably a bit more steep of a slowdown than what investors were expecting. Now, this next item that they're highlighting here is really important. Announces share repurchase program authorized by board of directors to repurchase up to $10 billion worth of shares. So Salesforce is officially a buyback company. no longer a dilutive tech company. Remember when people would look at the fundamentals here, and we can look at them using Qualtrim Insights. This tool is available to all Patreon members. I can type in ticker symbol CRM and pull up all the numbers here. This is quarter over quarter, the amount of shares outstanding for Salesforce. Notice how they're continually adding on more and more shares. This is a clear sign that the company is doing share issuance to raise capital, to pay developers, to do acquisitions, to do a number of things. Either way, they're diluting the current shareholder base by issuing more shares. Now this is flattened off over the past year. And not only that, but they're now saying that this is going to start going down and trend the other direction. This is exactly what's happened with many other great tech companies. We can look at Apple as an example here. Apple used to be, before they're this enormous buyback company, in 2013 right here, up until that point, they were a dilutive company. Then they decided to flip the switch and go the other direction to buy back shares. Google did the exact same thing. Their shares outstanding were moving up continually until around 2017, 2018. Then they started doing buybacks. And the same thing goes for Meta. And now the same thing is happening to Salesforce. This company used to be a company that diluted shareholders. Now it's going to be a company that does buybacks. And I think that's an important thing to know. Now, the CEO of the company, Mark Benioff, says in this earnings release, quote, "We had another strong quarter with revenue of $7.7 billion, growing 22% year over year and 26% in constant currency, showing yet again the durability of our business model. And we're thrilled to initiate our first ever share repurchase program to continue to deliver incredible value to our shareholders on our path to $50 billion in revenue in financial year 26. So $50 billion in 2026. Now, they go on to say other glowing things about the quarter, positive things. They're continuing to deliver disciplined, profitable growth at scale, and their capital allocation strategy will make them even better positioned company in the long term. All good things. You're not going to hear the executives of the company say really negative things in the earnings calls. So that seems normal. We also have the CEO of CRM, the CEO of Salesforce, saying on Twitter that Salesforce's growth, and he outlines it by year, from 2014 of $4.1 billion in revenue up to 2022 having 26.5, and then the guidance is up to $31 billion. So this shows remarkable top-line growth for this company. Now, having top-line growth is important. We all want to see this nice growing revenue, but it's not the only thing that's important. There's other companies that have top-line growth that's great. Twilio is one of them. This company has very fast top-line growth. But unlike Twilio, that has free cash flow that looks like this, Salesforce also has a profitable growth. They're growing at scale with profits. This is what their free cash flow looks like. This is what their free cash flow per share looks like. So even with dilution factored in, they're growing their free cash flow on a per share basis at a pretty rapid pace. Now add in the fact that they're also growing while now doing share buybacks. They're no longer a dilutive company. I view this as a very positive quarter, a positive development. I knew that this company would become a share buyback company at one point. I knew that was going to happen. I've been repeatedly saying this chart's not going to go up forever, but they switched this around a lot quicker than expected, which I think is a welcome change. So as for me, I didn't see any major red flags or reasons that caused me to want to sell out of this company. The moat's still there, the growth is still there. And just a year ago, Salesforce was selling for $310. It's come down significantly. Now it trades at 180. It's going to be even lower. And the company's fundamentals have improved over this timeline. So for me, I'm going to hang on to Salesforce. We'll see what happens over the next 5 years. But I think with this company, I think it's going in one direction. I think the cash flows will continue to grow. I think the buybacks will get bigger and bigger. Whether the market doesn't like it right now or does like it right now is not really my concern. Over the next 5 years, I still see a much more big, powerful, profitable Salesforce. So that's my thoughts on it. Let me know what you think. If you disagree or agree, I'd like to hear your opinion. That's all for now.